Joining us in the studio is our mortgage expert, Gerard Buckley. Gerard, great to have you back.
Thank you very much. Pleased to be back.
Things are going good?
Things are going excellent.
Now, is this a busy time in the mortgage world?
Absolutely. Before the holidays, people are trying to get things concluded before the year end. But really, the big date is, December 31st. And people are trying to get things clued up before the new year, which is also the new tax year.
Yeah, and speaking of the new tax year, there's some new regulations coming out. I know we're going to be talking about budgeting, but just before we get into that, a lot of folks are asking, there's a lot of confusion about this new mortgage qualification changes.
Absolutely. First of all, from my perspective and the advice that I'm talking to clients about is not to get upset about it, etc. We have methods in dealing with it, etc. Notwithstanding, what the federal government is basically doing is they are putting a new qualification rate for low ratio mortgages or mortgages that are less than the 80% of the value of the home, adding 2% to your borrowing rate that you're given to the bank. Or you have to use what is referred to as a qualification rate to qualify. But the big thing is, those are only for federal institutions. And we have 65 lenders that we deal with, and 2/3 of them are not federal institutions.
So you don't necessarily have to go to a bank to get a mortgage.
Not at all.
And those rules don't apply unless you're a federally instituted bank.
So the ones that are common federal institutions are your chartered banks.
Yep.
Some of your big credit unions.
Yep.
Some of your mortgage lending companies like Home Trust, etc. Those are federal institutions. Then you come down, there's a whole number of provincial credit unions that may not be federally regulated institutions. Right. Mortgage investment corporations, definitely not. And for sure, private lenders are not federally regulated.
Well, Gerard, that you've now given us the topic of our next show. We could get into the whole world of that. But today we've decided to talk about building a budget for new home ownership. The concept behind this is how to build a family budget so that you can get into buying that first home.
Well, absolutely. And so when a new buyer or potential new buyer is thinking about new home ownership, there's a lot of things to think about in advance. So normally, not all the time, but a new home buyer is often between the ages of 25 and 35, and they've usually in a relatively new relationship, thinking of family life, etc. And
probably just paid off school loans.
And probably talking about having a family, etc. And all of a sudden, we now have to think about how we're going to buy our first home. And there's a number of plans that allow new home buyers to have incentive. However, notwithstanding, the big expenses are, first of all, whenever you buy a home, there's going to be legal fees.
Right.
That's the big number one. And they will run anywhere from $1,000 to $1,500 based on the complications of the property. Mm-hmm. Then the other big one is you always have to pay what's referred to as a land transfer tax.
Right.
And it usually runs between 1% and 2% of the sale of the property. And however, if you're a brand new home buyer and you're less than 30 years of age, you will be able to have a government rebate for your land transfer.
From that.
Absolutely.
Okay.
So it's up to $5,000 for a first-time home buyer.
Okay.
And then, of course, the next two big ones, you'll be required to have a property appraisal.
Yep.
And in addition to that, a home inspection.
Right.
Then the other types of reoccurring expenses are things like utilities, your condo fees, your property taxes, your homeowner's insurance, property maintenance. You may need to buy furniture and appliances. But the big thing to remember when you're thinking about buying a home is your basic home costs. So therefore, the price of your mortgage, your interest rate, your property taxes, and your heating bill shouldn't be any more than about 32% of your total budget.
Okay, so if your family household earnings are in at $100,000,
Absolutely.
then you don't want to be having to pay out more than 32% of that.
Absolutely, which is $32,000
Right.
in those things. And then there's another measurement that lenders look at, and what is referred to your total debt servicing ratio, and that should be no more than about 40 or 42%. And adding on to your home ownership cost that we just spoke about would be cost of debt. So credit cards, student loans, car loan. If you were in the situation you paid family maintenance fees, all of those get added in, and that accumulative number should be no more than 42% of your total income.
That added to the mortgage.
That added to the mortgage.
So 40. So you're looking at quite a considerable amount of money there.
That's right. Now, the only thing that's a little bit of a caveat in your home cost, if you intend to buy a condo, and many times young people are looking at condos, you only have to add in for lender purposes half the cost of the condo fees.
Oh, okay.
And the reason why is there's a portion of your condo fees that go towards the reserve fund. So they take that into an account that it's theoretically a savings amount for the total property or project.
What is the biggest mistake in terms of budgeting that most new home buyers might do?
They don't take into account some of the incidentals. They don't understand this whole idea of appraisal. Why do I have to get an appraisal, etc.? Why is that required? They also often overlook home inspections. And home inspections is a big thing, especially if you're not a handy guy.
Yes.
If you're not a handy guy, you want to be making sure somebody is looking at this, that the roof is solid, etc. Because you own this home, and in 2 years the roof needs repair. You're up for anywhere from an $8,000 to $10,000 bill.
Absolutely.
And those are some of the big things. The big ones, most people understand the legal fees. You read any literature, you'll find about the legal fees, land transfer tax, etc. Of course, on the sale of the property, the real estate agent is usually dealing with a number of those, costs with you. The other thing that's surprising when people, and often real estate agents bring this to the attention of people, but what are the chattels? What are the furniture that's going to be left behind?
Right.
Because, like, if you buy a condo, you expect to see the fridge and the stove and the microwave left behind, but if you don't write that in there, somebody says, well, you didn't write it into your offer, so all of a sudden that stuff is not there when you go to move in, and that can be a big surprise to a brand new homeowner because they have never seen the difference between does the fridge go or does fridge stay, because those are some of the surprising ones that I've seen, and that comes up in condos from time to time because most people that buy houses assume you're going to have to bring your own fridge or refrigerator.
Gerard Buckley, some great tips. If folks have some more questions about budgeting for new home ownership or just mortgage questions in general, where can they reach you?
You can reach me here at my office in Collingwood. We cover everything from Orillia to Owen Sound. And you can reach me at 705-532-1182. And I'd be happy to sit down with couples or people looking to buy their first home as a complimentary consultation.
Thank you so much for joining us on Talk of the Town.
It's a pleasure.
Here's Adele and Water Under the Bridge on 95.1 The Peak.
Verico the Mortgage Wellness Group, broker number 11970. Each office is independently owned and operated.